Hey guys, Mike here. So another interesting day in the market where you got the SPY going red, the Qs held on to some green, but of course there was a sell-off right at the last like 15 minutes. I think that has to do with the debt ceiling, which of course, what I read, unresolved, and the president's going to the G7 conference, so who knows? I'm sure their aides will be behind closed doors. And again, I think we all kind of figured, they're going to make this as dramatic as possible if they do come up with something, which I mean they should. The odds are in the favor they should. But like I always tell people, don't be surprised. I don't know why our politicians would surprise anybody at this point in time. But what was amazing, I wasn't surprised the S&P was red. The Qs seem to always be green. I'm going to show you why that happened. But boy, you start off the day with sales, and eventually bad news will be bad news at some point in time. But of course, retail sales came in lower than expected, and I'll get into that. When you look at this chart, you really can't tell though, right? You kind of look at that and you go, well, I mean, still trending up, even though it's been coming down the last few months. And you look down the bottom down there and you're like, well, no, I mean, it increased a little bit when you adjust retail and food services and stuff, or total monthly percentage change. And when you look over to the left from 2015 to 2019, kind of somewhat looks normal in a way, I guess. But again, when you dig deep, it's actually a little worse than you think, right? So U.S. retail sales increased 0.5% over the last year, the lowest growth rate since May of 2020 when we were shut down, and well below the historical average of 4.8. After adjusting for inflation, though, the story gets even worse. Retail sales fell 4.2% over the last year, the sixth consecutive year-over-year decline. You've heard this from these companies, how they're making more money, but they have less customers because of the price increases they're putting on us, right? Passing on to us, and we continue to pay them because sometimes we just don't have any choice, right? And then, to show you, this is what I'm talking about when I say it takes time for these higher rates to take effect. And I think we're seeing this in the commercial real estate market especially. So you can see CRE, which is commercial real estate, originations declined more than 50% in the first quarter of this year, which is just staggering. And you can see the Global Real Estate Firms Lending Momentum Index, which tracks the pace of CBRE origination loan closings across the United States, declined by a whopping 33% quarter over quarter, and is down nearly 54% year over year. And I mean, I guess that's where this comes in now. You see the Dallas Fed Banking Conditions Survey, which came out today, total loan demand, credit standards, and terms. You can see demand pop back up, but you can see the other one there, the credit standards and terms, still declining. I mean, it's worse than it was in 2020 when the world was shut down, which is kind of funny to me. But again, that's just what's happening. So not only the rates higher, people are just having a tough time getting the loans, these companies are. And so keep that in mind. And we'll see where it goes. Again, you can't imagine this is going to get better over the next, 3 to 6 months. There's no way, unless they start cutting rates, I guess. But if you start cutting rates, doesn't that mean the economy is really slowed down? And of course, with the debt ceiling and everything going on, the rising cost of insuring the U.S. debt against non-payment, I mean, it keeps going up. And so this is the 1-year CDS, and you can see it right there. I mean, this goes all the way back to 2007, which is amazing when you think about it, right? And just look at that. I mean, in 2011, we actually came close to a default in a way, but look at it now. I mean, that is amazing that it's 3 times higher, or about 2.5 to 3 times higher than at any point in time in the 21st century. And if you're liking this video, guys, please hit that like and subscribe button. That will be the thumbs up right below the video there. Just go ahead and hit that for me. I sure do appreciate it and all your support. And if you like this kind of content, think about subscribing. And just a quick reminder, the deal on Seeking Alpha for $99 for a yearly subscription, which is normally $239, will end in 6 days. Again, you get pretty much everything you want on their site. You look at the top stocks, top ETFs, stock screeners, the ETF screeners, comparison, analysts, news, you name it, you get it on there. If you want to take advantage of that, go right below the video and you can click on that link right there and sign up if you are interested. All right. Thanks, guys. And again, let me know what you think about that in the comments, guys. I mean, it's I guess I understand why the CDS is higher than it's ever been. I don't know if they're basing that off the fact of what our, government's all about, or how much harder it is to get stuff pushed through. I don't know what it is, but I mean, to be that much higher than it's ever been, it's a picture worth 1,000 words, right? I mean, I guess it kind of summarizes what kind of market we're actually in and stuff. And just with the volatility, the uncertainty of so many things going on, I guess it can't surprise us. But, going into what's happening, I'm going to go into the SPY, what's dragging that down, and then show you exactly why the Qs actually, even today, the NASDAQ that is, set like another 2023 high, right? And when you look, obviously, here's your SPY, the S&P, right? And I mean, going nowhere, just coiling it away. But when you look, going back from the first day, trading day of April, we're up 0.71%, right? And what was that, 45 trading days? And I mean, you go back to even almost the beginning of February right there. And, first day of February, we come over and we're barely up, not even percent, are we? Yeah, it's like 0.18%. I mean, there's just nothing going on there. And I guess what I could do, I mean, if you look at that, it's like, wow, it's kind of like a diamond formation, right? And if you draw that in there, kind of lets us know that this thing is starting to play out. And so it's going to have to choose a direction one way or the other. Put in the comments which way you think it's going to break here. But, 'cause I also read a great article today on the 0 DTE options and how that's what's keeping us basically locked in this range, since the SPY is the most heavily traded. And it'll keep us locked in the morning time, and then people don't buy 0 DTE options in the afternoon because of decay. So they'll go with longer dated options and stuff, and then it kind of frees the market up to move one way or the other, depending on how it started out that morning, and if they're buying puts or calls and stuff. But, let me know in the comments which way you think that's going to break. But, you can just see the RSI down here is like, just struggling, right? Buyers and sellers don't know which way this thing is going to break. There's so many things going on right now. And, of course, you got the financials, you got energy, all that's what's weighing on the S&P. But then you look over at the Qs, and you're like, it's a totally different story. I mean, today, at one point in time, it set a new 2023 high. It actually had broken out of this rising wedge finally, which seemed to go on forever, but I think the sell-off actually put it back in, that last-minute sell-off. I'll have to double-check that. But again, that puts the next level right there, as you can see, was a 333 right there in play, right? And so, I know people say, oh, I'll never get there, and maybe not. But every time people keep saying never, it just keeps happening, right? Because people keep flowing into tech right now. And so I remember when we talked about it a long time ago, we said, yeah, higher interest rates. Remember, it's supposed to be negative for smaller tech, but not bigger tech because they have so much cash on hand, right? And you can see it's up since the October low about 28% right now. And here's the big reasons why. It's not, there are more stocks, but the most part, it's the big ones, right? You got Nvidia right here. Look at it. And in that wedge right there, it's already broken out 2 before this, but what did it do today? Set a new 2023 high, right? Also broke this level right here, which goes back to the high of 2022 for it, right? Now that puts into play the 2021 highs. And I know people are saying there's no way, and maybe not, right? I mean, it really depends on earnings for this stock. I mean, again, everybody's been trying to short it and short it and short it. And I'm like, no, thank you. I'm good. I'll just stay where I'm at. Preserve my capital, because this thing's been on this parabolic rise, and when things just don't make sense, I like to stay away from them. I'm good. There's plenty of other things you can short if you like to short, but with this one, and eventually the shorts will be right. I mean, you got to be right eventually, and I think probably earnings might be that way. But just imagine, can you imagine, put in the comments, do you think earnings are actually going to justify this thing to continue to go higher, or do you think that's going to be the straw that breaks the camel back? I'm just curious. I'm sure they're going to say AI 10,000 times to kick the algos, but just wonder on that one. And so then AMD, right? Another semiconductor. What's been doing? Boom, dropped on earnings like a madman. Now it's back up in this rising channel right here. Also, when you look at it, not oversold on the daily, right? So it still has plenty of room to keep moving. And today you saw a big move of almost 7%. Now look at this, about between 1 and 2 o'clock. Boom, like what in the world was that right there? So, of course, I went and looked at it, and it looks like, wait a minute, somebody bought some shares. So you have this, because everybody's coming out with what they bought in the first quarter and things like that. And so, of course, Third Point LLC, I guess run by Mr. Loeb, whoever that is. He's an activist investor. He bought 1 million shares, and the market seemed to like that. But also, at the same time, there was a report came out from an analyst saying that the PC market might not appear to be as bad as people think. It might be normalizing, which means they're getting rid of all their inventory, AMD is. And so that could help them a lot. Again, all speculation. We'll see if that's the case. Again, these are cyclical. That's why you're seeing a bunch of them move up at the same time. Keep that in mind. Now, the other thing to look for here's the next supply zone it's going to try to get through, okay? If you can get through this supply zone between like 102, 106, Boom. All right, it's going to keep on going. So keep that in mind. It's a heavy supply zone. So we'll see if it can make it through there. Now, the theme of the month, at least, is underperformers are becoming outperformers. Here's Amazon. I showed you this last week, I believe it was, where they were lagging, right? And what are they doing now? Big moves up. Now we're coming to a supply zone to test the supply zone here, which means there's going to be some sellers there probably. We'll see. If we move through that, you're going to be looking around 121 to 124 is going to be your next level to reach. Again, not overbought on the daily, not overbought on the weekly on the RSI. So this one continued to run, and it looks like big money's rotating out of some other ones and rotating into Amazon and also Google, right? Google's had a big move up, and so there it is at 121, I believe, for the day. Both of them hitting these big supply zones here, so they're going to work their way through that. Google also left behind a gap right below, so we'll see, because this one right here actually is overbought on the daily, and so, you know, a little healthy pullback and never hurt anybody, right? Especially if you want to fill that gap right there. But again, you can see the supply zones. I got marked out. You can see the numbers to the right of what it could go to if it can break through that first supply zone. So still room to run. We'll have to see on that right there. Now, somebody asked about Tesla. What's Tesla doing? Nothing, right? I mean, it's still, when you look out, this right here, going back to 2022, you can see it's still in this downtrend, right? Which really started in 2021. But it's just in this channel, keeps butting its head up against the outer trend line. And so, you know, just cannot break above and stay outside this channel. In the symmetrical wedge right here, you can see since it bottomed out around $100. And so eventually, coming up here soon, probably in the next 2 weeks, it's going to have to make up its mind. It's either moving up or down. And obviously, there's going to be news and all these other things with the debt ceiling and everything else is going to affect it, right? So if the market all of a sudden starts moving again, then guess what? It's going to be moving too. But right now, it is just sitting there, and buyers, sellers like, what are we going to do here? And it just keeps making gaps and filling gaps. That's basically what it's doing right now. And we all know Tesla. It can move fast, so we'll see. Let me know in the comments what you think. Now, I wanted to put this in here for you just in case. A lot of people talk about PayPal, right? And they've been trying to find the bottom on this thing, and I said, watch that 63, and below that, watch it around like a 60-ish area. And you can see it keeps dropping, right? And so, again, be very careful with this, because I told you in 2017, it moved up really, really fast, about 3 months straight, and really fast. And if I pull out on the weekly and I add a volume profile to this, you'll see what I'm talking about, because it breaks through that trend line right there, and it's trying to bounce at 60 right now. There's a little support there, but you see this big old gap right there, that volume gap. That's because when you look over to the left, it moved up so fast, there just hardly is no support there to bounce off of. And so if 60 can hold, good. If not, watch that 59-ish level. If it breaks that, well, then, you know, you can see PayPal have a really, really rough 2023 until it finds a bottom. So just keep that in mind. And again, let me know if you're playing that one or not. I mean, again, it is #1 in its sector and stuff with what they do. I think they just had a bad marketing campaign, and it's amazing what a bad marketing campaign you can do, right? I mean, is it Bud Light? Is that who I'm thinking about? That's have a pretty rough go here. So, I mean, I don't know how some of these marketing campaigns get approved. But, you know, it's amazing how that works, right? And people get paid a lot of money, by the way, to do those jobs. Now, that leads us lastly into earnings. Tomorrow, all anybody really cares about is going to be Target, because they want to know how their inventories are looking, how people are shopping, and are they still raising prices. That's going to be a big thing. Then in the afternoon, you're going to go with Cisco to pay attention to on that one. That's a pretty popular stock. A lot of people are into it. And tomorrow's economic news should not affect markets at all. It's going to be about the mortgage industry, real estate industry, going to mortgages, going to supply, things of that nature. May affect some of those stocks. But again, I don't see if today's data didn't really affect the market that much, I don't see how this would. And I don't see any Fed president speaking, which is kind of good, because they've been out in full force. And I mean, you can see, I think their narrative is, 1, we hadn't decided what we're going to do at June meeting, or 2, well, you know, we're not really restricted. We're not really affecting inflation like we want to on the service side of things. And then they think they're going to see some effects on the housing side of things, because that's what makes up 40% of what they're looking at anyway. But they're looking at such old data. That probably won't be the case. Again, I'd love to be in that meeting. I've never figured out why anybody don't raise their hand and say, how come you don't use one of the companies that tracks real live rents, right? That actually does it for a living, instead of going way back in the past and trying to survey people and stuff, which is just, it's crazy, right? Here we're talking about AI, the age of artificial intelligence, and we're calling people on phones saying how much can you rent your house for? Like, doesn't that just blow your mind? That's how we're doing this. And then we go, just ain't coming down. I don't know what to say about it. You know, is it even correct information? And I told you about how they do unemployment, right? I mean, it's mind-boggling. It's absolutely mind-boggling. So anyway, I hope you got something out of it, guys. Hit that like and subscribe button if you did. Really appreciate you guys watching the video, sharing the videos. Helps out the channel a lot. And I'll end up seeing you guys tomorrow.